Without warning, share prices are plummeting on the New York Stock Exchange. Investors are stunned. For the last 5 years, the market has only gone up. In the space of an hour, a staggering 2.5 million shares are sold. The next day, the downward spiral continues.
As people came in to trade stocks on October 24th, there was a sense that maybe something had changed, that there was something different. All of a sudden, there just weren't buyers. People were willing to sell, but there weren't buyers coming forth to buy the stocks. And prices began to fall, $2, $4, $10 a share. It was sort of horrifying.
That morning, there were drops on the stock exchange. They were so sharp and so dire, stocks suddenly dropping 10, 20, 30 points at a time, that it's said that there were shrieks and gasps in the gallery of the New York Stock Exchange.
People are stunned by what is happening and terrified. Thousands of people begin to gather outside the stock market. 10,000 people. They fill the streets from Broadway to the East River.
People wanted to know what was going on. They went there. These huge crowds gathered around the stock exchange, around the statues and on the stairs, waiting to get any kind of news they could as people came out of the exchange.
Hello, guys. Listen, are you prepared? The meltdown is coming. The Federal Reserve is bringing it. October, November, December, they started. You know, remember for years, ever since the economic crisis of 2010, which was a contraction of the entire economic system, they stopped the contraction by injecting liquidity into the system, and they kept this up for years. But in October of 2017, which is not very long ago, they started withdrawing that money from the system that they used to prop up the world's economy back in 2008. They started withdrawing it, and they are actually quite literally trying to do the impossible, the Fed is. They're trying to take all of that money that they used to prop the economy up over those years, and they're trying to withdraw it out of the system. So they started extremely slow. We felt almost no effect for the first 3 months because they were quite literally only withdrawing $10 billion a month from the system. And it worked for them. They got the first $30 billion done in the first 3 months, October and November, December of 2017. Then in January, they increased it to $20 billion. They effectively doubled the amount. What happened was the stock market reacted to that. They came in with the Exchange Stabilization Fund and a number of other methods that they use to control the markets, and they stemmed off the stock market problem, but they never really corrected it. That happened early this year. And they still continue to raise the bar of how much money that they are, of liquidity that they're actually quite literally withdrawing from the system. This withdrawing liquidity from the system is going to have a cumulative effect. And just like the stock market crash of 1929, which I started this program from, we're going to see a sudden shock. Everything is overvalued. There's going to be no buyers. There's going to be what they call no bid. This is going to be a crisis like we've never really seen since 1929. So it'd be like your great-grandparents saw the crisis of 1929. We're not used to stuff like this. We've never seen anything like this before. It's going to be, right now, in places like around Los Angeles and places, all across America, North America, we have small little camps and stuff where homeless people shelter themselves in the inner cities and stuff in tents. They quite literally live inside tents. And they live inside campers. They live inside their cars. In a small way, we have that going right now. It's happening right now while we speak, because we never really did pull out of the crisis of 2008. And the way it is right now, most people don't have to deal with homelessness on a personal level. And so we as the general population most people are quite unsympathetic to people who are homeless at this point. They're like, we don't want them here. Don't leave them in our yard. Get them out of here. Bring the cops in. Call the cops on them. Get them out of here. You know, that's the attitude that the general population has right now. But what's going to happen is when this crisis hits, homelessness and tent cities are going to spring up everywhere. And if right now, if you're only in dollars, you might be one of them living in a tent, quite literally, when everything turns over. I was expecting this market crash a little bit sooner, but the Fed is actually getting away with it more than I thought. And this is because the markets are so manipulated and controlled. It's actually worse than I thought, and they're able to actually keep this game going a little bit longer. But the longer they go with this game, the more powerful and intense the crash is going to be when it actually hits. Because what it's doing is it's creating leverage pressure within the system. Every time the Fed goes another month and they withdraw another, right now it's 30 billion of liquidity out of the system, they're creating leverage pressure. It's the same thing as if you were trying to, I don't know, if you were trying to put pressure with on a spring or something. In the end, you know it's going to crack. Okay, if you had a tree and you were pulling it down with a cable, you know, and the tree was bending more and more and more, you know it's going to snap and splinter at a certain point. Well, this system has actually bent more than I expected it to. But it's continuing to bend, and they're continuing to put more and more pressure on. But we know what the end result's going to be. We know it's going to snap. When it snaps, it's going to snap fast. That's because of the pressure that they're putting on it. So they're going to increase at the end of this month, I guess, to $40 billion a month of liquidity they're going to be draining. So initially they started with $10 billion, and now they're going to have it up to $40 billion a month. They're going to be withdrawn from the system. If that wasn't bad enough, 3 months from now, they're going to increase it to $50 billion a month. This is totally insane and unsustainable. But what makes them think that they can do it is the fact that they are doing it. And it hasn't been proven that they can't do it, even to themselves, because the whole system hasn't come down yet. When the system comes down, it's going to be proven to them that they can't do it. Never underestimate the power that they have to create money. They don't have much power when it comes to controlling inflation. In fact, they cannot control inflation once it starts to run away on them. Because they have one tool, that's to create money. That one tool that they have to create money is a tool that can kill deflation. And this event that's coming is a deflationary event. Do not mistake what it is. It's a deflationary event. Like the Great Depression, there will be no buyers for anything. Money and liquidity will dry up in the system faster than hot spit on a hot stove. Red hot stove. Psst, it's gone. That's the way the liquidity is going to disappear. There's going to be no buyers for anything. All the way across the board. Houses, no matter what you got, no buyers. But on the other side of this, when the Fed reacts, and do not underestimate their ability to create money, when they start creating money, they're suddenly going to turn this situation around, and they're going to be the heroes then that save the world from the next giant financial crash or crisis. They're going to be hailed as heroes for saving us from this next crisis. But in doing so, when they first save us, all of this new fresh liquidity that they're going to create and inject into the system, and it's going to be massive, folks, because last time they injected a lot of liquidity. You thought they did a lot last time. They're going to do more this time because they're going to have to save the world. It's going to be incredible the amount of liquidity they're going to inject into the system to turn this thing around. But believe me, they will turn it around. When they turn it around, at first, we're going to have an economic recovery. And it's going to feel good because we've never really had an economic recovery. After the 2008 financial crisis, we had they almost injected enough liquidity to cause a economic, they almost stimulated enough to cause an economic boom. But they fell short. They called it out. They said, okay, we have an economic recovery. But everybody knew it wasn't really quite there. It was like the economic recovery that wasn't. And it continued that way for a long time. They were in the newspapers preaching, and they still are. In fact, there's a lot of people out there that believe we're in the middle of an economic recovery right now. They're buying the Kool-Aid. Meanwhile, the Fed's withdrawing the liquidity that caused the stimulation that caused everyone to think we were in an economic recovery. But this time when they stimulate, it's going to be so much bigger and better and brighter that they are going to stimulate an economic recovery, a real, genuine economic recovery. This is when we're going to start to see the destruction of the physical currencies. All of the fiat currencies, people are going to lose confidence in their purchasing power. And they're all going to simultaneously go into a hyperinflation. Now, this is going to create the biggest problem on earth that's ever been. Because ultimately, when we have a hyperinflation, like in Zimbabwe, or going back to Weimar Germany, or those are some of the most famous hyperinflations, but there's been a number of others. Normally, typically, what a country does when it's in a hyperinflation is they resort to something that's another different currency of value. Like in Venezuela right now, they're using the U.S. dollar as a supporting currency rather than their own currency. And this is what they always do in a hyperinflation. But this time, because it's going to be all fiat currencies, they're not going to be able to reach out to another fiat currency because they're all going to be in the same boat. So what are they going to do this time? Well, it's very simple. This will be the first time ever that they reach out to something that's not a fiat currency, because they're going to lose confidence in all fiat currencies. They're not going to want them. So they're not going to reach out to them. They're going to reach out to something else. Now let's just think for a minute. If you were to step outside the fiat market, fiat monetary system, and want something of value that you can use as money that's not fiat, what is there out there other than fiat? Well, surprisingly, you would think that there would be lots of things you can use. This is what you would think. Because it's a big world out there, there should be lots of alternatives to fiat currency as money. But in truth, there's almost nothing. There's gold, there's silver, and there's cryptocurrencies. And that's it. Now, cryptocurrencies is the newcomer. Before cryptocurrencies came along, there was only gold and silver if you stepped outside the fiat system and you wanted money that was not fiat. There was only gold and silver. Believe it or not. Now that should be in Ripley's Believe It or Not, that the fact that there's only gold and silver. Now there's an alternative to gold and silver, which is cryptocurrencies. But other than that, there's really not much out there that you can turn to other than the fiat monetary system. So, we know where this is going to go. We already know. When faith is lost in all of the fiat monetary system and all the fiat currencies, it's going to act as a driver. Just like a hammer drives a nail into a wall, you need a driver. You're not going to get that nail in. Try to use the palm of your hand to drive that nail in, and you're going to bust your hand up. You got to have something as a driver. And this is the way with cryptocurrencies. I'm actually amazed that cryptocurrencies have done as well as they have, considering that they don't really have a driver yet to drive them in. Right now, what they've had so far is probably the equivalent of you trying to drive a spike into a board with your fist. It goes in a little ways. Just the tip goes in. And you hurt your fist driving it in, by the way. But now you use a sledgehammer to drive that sucker in. She's going to go in rather fast and rather effectively into the board, the nail, the spike. And this is what's going to happen when the fiat monetary system people lose confidence in it, and we all go into a worldwide hyperinflation. It's going to act as a driver for not just gold and silver, but for the cryptocurrencies. And in fact, each one's going to serve its purpose. Gold and silver is going to serve the purpose as being a reliable, stable, hold in your hand asset class. And cryptocurrencies is going to be a way of transferring vast amounts of wealth across the internet. And they're both going to serve their purpose. Cryptocurrency is money, and gold and silver is money. Get over it, you guys who hate cryptocurrency. Because cryptocurrency is here to stay, and its value is only going to go up because it is actually rock solid. It's not like the fiat. It is not like fiat. You cannot create more Bitcoins. There's a limited supply. There never will be any more. And in fact, the supply is dwindling. They created 21 million Bitcoins, right? Everybody knows that. Well, what about the Bitcoins that get lost in the system? Little pieces that constantly getting lost in the system. You have a little minute amount in your wallet, and you lose your old computer. And it makes its way to the landfill. And there was like 003 or 004 of what Bitcoin in that old computer. But back then it wasn't worth quite as much as it is now, so you forgot about it, and the computer went to the landfill and you lost it. I'll tell you a little story about this. And I know exactly this, and this eats away at the total amount of Bitcoin. Because everybody makes these mistakes. I'll tell you what I found. I found that I had on a exchange back when I had quite a little bit of Bitcoin when I was mining, and they were nothing. They were nothing back then. I mean, they were nothing. I transferred them all out of the exchange, right? But I left 002. No, 02. I left 02. 023 in the exchange. And I forgot about it. Forgot all about it. In fact, I didn't even know it was there. Right? And I transferred my Bitcoin. And back then, that amount was worth nothing. 50 cents. Or something. Something stupid like that. You know? And so I didn't pay too much attention to it. Well, it might have been $2 or $3 or something. But it wasn't much. It was not worth messing with. It wasn't worth, because I took the major amount out. So I forgot about it. I just put it out of my mind. Well, I just happened to go yesterday back to my account at that exchange, and it's still there. Still there. 02.3. That's what it is. 2% of a Bitcoin. And I was like overjoyed. It's like, wow, boys, that's the equivalent of what? Over 1 Litecoin. Almost 2 Litecoins. It's like, wow. 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 Anyway, I was pretty happy. So this tells you this same thing is going to happen again. The cryptocurrency, but it's also going to happen to gold and silver when this crunch comes. And so, I mean, if you've spent whatever you've spent, you're going to find that it takes a very little bit of investment right now in these alternatives to fiat to make you rich. So some people, if they have invested in the alternatives to fiat, they're going to do rather well in this crisis. Rather well, I laugh, but I mean well. They're going to do really well. But these other people who are going to get caught with their pants down are going to get absolutely slaughtered and destroyed. You're going to see them living in tents. Now, the people who listen to me are probably going to be people who are not living in tents when this crisis hits. You know? But I'm not recommending that you go out there and put all your money into cryptocurrency. Far be it. I'll tell you what I think, personally. I think that silver right now has very little downside risk. Now, this is just my personal opinion. It's not investment advice, but I think silver has very little downside risk, and I think that the exchange rate between silver and gold, right now is at an awfully weird level. Like it's like 84 to 1 or something like that. It's never been at that rate and only once or twice in history. It's not going to stay there. So you'd make money on silver just with it going back to a normalizing, back to the normal exchange to gold ratio that it should normally be. You probably double your money right there alone. And also silver's down near mining production costs. And it is an just like these other alternatives to the dollar, it's an alternative to the dollar. But what even makes it better, at least for you guys up here in Canada, and I think down the States too, you can buy coins, silver coins, or real silver coins, that have a face value equal to pretty much what you pay for them. So here in Canada, we have like a $20 silver coin, right? And so you can take it anywhere and spend it because it is produced by the Canadian Mint. And they will sell it to you $20 for $20. The Mint will. Of course, I think they'll only let you have one or two. You know? But they'll sell you 20 for 20. So you give them $20 and they give you a $20 back. But it's a $20 coin that's actually silver. Pure silver. So that's a coin that'll work in deflation because it is minted. It's a coin that is good for all. It's like a bill. It's like a $20 bill. You can spend it anywhere as $20. Of course, most people won't because it's a collector's item. But still, it is legal coinage of the Canadian government. So it's $20, $20 coin. You can spend it anywhere, and that's great. I think they might have the equivalent in the United States, and so it's good both in deflation and if silver prices go to the moon, it's pure silver, so it'll work in both circumstances. But then again, on the other hand, I think silver eagles are still only $1. That is so ridiculous. The face value is only $1, but still, if we have a deflation, that dollar could be worth a lot. And if we have a hyperinflation, the silver is going to be worth a lot. So it works in both ways because it's actual legal currency. And you don't pay too much more for a silver eagle. They're recognized everywhere. So this is a great thing. Great thing. This should interest anybody because silver prices are down near the rock bottom right now. As far as cryptocurrencies are concerned, I think that there's an entire possibility that they might go down before they go up. But I think ultimately, if you hold through that, you'll be okay. But you might wish that you had bought later rather than right now. But they could, I mean, it's a possibility that they might only ever go up from here. So it's a little bit risky. Cryptocurrencies, I find that a little bit risky. Now, the dollar. What about investing your money in the dollar? And putting all your money in the dollar. In the almighty dollar. Right? Well, I think what's going to ultimately happen in the end is we will go into this hyperinflation. The dollar has inflated away 96% of its value already. since back when that Great Depression I started the show with happened. And it's going to inflate the last 4% away. It's on that, moving in that direction. Does anybody out there raise your hands if you believe it's going to move in the opposite direction and it's actually going to go back to being worth $1 for $1 again, like it was in 1929? Anybody believe that's going to happen? I mean, if you believe that's going to happen, you're in the minority, because most people believe it's going to continue to inflate. In fact, I did a study on my show about that. So anyway, long and short story is, I hope you guys are ready for some turbulent times. You've never seen anything like this in your life. This is going to be weird. It's going to happen really fast when it happens. In fact, I've been waiting for the U.S. 10-year to exceed 3.25%, and that's when I believe that it's ready to happen. But if Deutsche Bank goes down, all bets are off. We could have it happen sooner. Thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye.